Hello and welcome to this edition of TMA's Farm Margin Talk. This is Devin Schierling, Grain Marketing Manager for TMA. So before we talk about this week's Farm Margin Talk, I just hope each one of you are enjoying this wonderful weather we're having outside, and it's making it awful challenging to finish this week's Farm Margin Report without going outside and enjoying some of this wonderful fresh air. So as we look at our Farm Margin Report for March the 9th, 2012, you'll notice that we saw a significant decrease in our corn profitability, while once again bean profitability increased. So last week we were at $324 an acre of profitability on irrigated corn, and this week we dropped $70 back down to $254. So as you can remember, we've had a very large swing in our corn profitability this week, and wheat also was a challenge as well. This is the information that how we came up with our farm profit numbers based off of Groveland cash prices for our new crop commodities on March the 9th. So some of the big news that came out today after the USDA report this morning was Informa's guess on what they believe the intended planted acres for spring crops to be this year. And the big number they came out with was 95.513 million acres of corn. That's an increase of almost 800,000 acres from their last month's report. And as you can see on the right-hand column, the USDA has increased their numbers, but we won't know what their March number is until that March 31st report. So once again, I think it's fair to say that the battle for acres will continue to be strong here going forward. We're getting a lot of questions on what value I have in my wheat crop insurance policy. And so I just ran this chart. It's a year-long chart of the July of 12 Kansas City futures chart. And so as you look at this, you'll notice that the red line at the top is where your base price is at $8.62. And the blue and the black line below that are where your price claims would come in if you grew your APH. So what that basically means is if the price falls below $6.89 and you grow a 45 bushel APH, that's where your claim would begin. So it puts into perspective what you have from a price perspective with that current policy. Many of you have come to a meeting, you've seen this type of slide, but this just shows you how you come up with that revenue. Remember, up here at the very top, if you follow my mouse, you have 45 bushel APH times 80% policy gives you 36 guaranteed bushels to market. At the crop insurance base price of $8.62 gives you a farm revenue of $310 an acre. So remember, you have the higher of the two, and we're going to assume for this example that our price for our harvest price will be below that $8.62 level. So if on your farm you come in and grow a 40 bushel yield, and let's say the harvest price is where we close today at $6.92, that equals $276 of farm revenue. Remember right here that you're guaranteed $310 an acre. So if you take 310 times 276, that gives you an insurance claim of $33 an acre in that scenario. I just like to walk through that to help give you a better idea of how that works. And this is a chart that one of our grain marketing specialists did a great job, Jared Creed, in helping me create. It just shows you where your revenue claims will start. So in this situation, in the yellow, you're going to get a revenue claim. And in the blue or gray, you will not get a revenue claim. So to really break this down, let's just assume that the harvest price comes in at $7 and you grow a 40 bushel crop. 40 times $7 is $280. You would be in a price claim in that situation. But with just a 5 bushel jump in production, you would work yourself out of a price claim. Now at the end of the day, you have the dollars to be successful on your farm and you're profitable, but what our goal is to help you manage that revenue throughout the process. Now, weather has been a hot topic, whether it's talking about how our wheat's too far along and worried about some possible freeze situations down the road. So it kind of feels like we have an angel on one side and the devil on the other side. And this is the angel. The next 2 weeks, QT Weather is projecting that this is the rainfall pattern that we're going to have in the United States. But with that being said, the Palmer Drought Index also came out earlier this week, and as you can see where we're at right here, that we're in some improvements of our drought conditions with the recent rains, but everything to the south and west of us is in an intensifying drought situation. So let's make sure that before March the 15th, our crop insurance deadline, we make the right choice and protect ourselves and manage that revenue on the farm. What's causing the market to move? USDA reports that came out today, as well as getting ready for the March 31st planting intentions report. Rumors of China buying a very large amount of corn today, and then weather, like always. So for more additional information on how to bring this farm revenue to your operation, feel free to contact one of our grain marketing or crop insurance specialists. Thank you and have a great day.